So we heard about their charge-off rates. She also addressed loan generation, as I understand it. What did she have to say?
Right. So, David, what she talked about, Marianne Lake, this is JPMorgan's CFO, she's talking about loans actually depleting a little bit, the growth rate of those. So last year in 2016, loans for their what they call core loans were up 15%. Now they're saying 10% for this coming year. So it's definitely a bit of a pullback. And as you mentioned, as far as consumers, she's also saying that charge-off rates for these credit cards are going to be higher, which is bad for the bank.
So I at least was a little surprised at it, because I thought the banks were saying that there's animal spirits kicking in, they're getting a lot of people coming in and asking for new loans, new activity and things like that. This tends to point in the other direction, doesn't it?
Exactly. So far, all we've really heard in terms of addressing that, I mean, she's going to be asked questions later, so maybe that's something that'll be brought up, I hope anyway, because it is huge for JPMorgan in terms of their growth, is just that some of this stuff is happening from whatever happened late last year, and we don't really know what's going to happen in 2017. And if you think about what banks have said, in terms of the commercial side as well, there's a lot of deals that are sort of waiting in the pipeline. Where's tax policy going to be? Are we going to actually get healthcare reform? And so on the consumer side, you can see why some of that would, sort of hinder some of the loan generation as well. But she hasn't actually said that. So I'm very curious as far as what the reasoning would be behind that 5% change.
It feels a little like we're moving sideways. But what about trading? Terribly important to JPMorgan. Make a lot of money off it.
Exactly. So interestingly enough, and again, this is something I would love some more granular clarity on, why is trading modestly up for 1Q? If you look back to where we were in the first 3 months of 2016, it was really just a terrible trading quarter, not only for JPMorgan, but for everywhere across the street. And, in second quarter, when things picked up, everyone was thanking God that we really had a better quarter. If we're comping off of a really bad quarter from 1Q last year and we're only modestly better, that really raises a lot of questions about where this momentum of trading and volatility after Mr. Trump was elected, where is that all going? Why are we not seeing that in a much better quarter for so far this first quarter?
David Bianco of Deutsche Asset Management also ran the table with us. It begs the question, as a market participant, you can price in the optimism. As a chief executive, it is so much more difficult to do. You can't turn around and say, yes, we agree with the base case scenario in the S&P 500. We're revising our earnings estimates higher to go in line with the analysts. That's not how it works, is it?
No, and we like to have, realistic managers. And when I look at financials, I mean, I am overweight. I'm still overweight financials. But our argument has always been we don't expect GDP to surge. We don't expect interest rates to jump up. But I do think interest rates go in the right direction. Markets businesses go in the right direction. And most importantly, the dividend payout ratios go up. And that supports a little bit further PE and price to book expansion. And where the payout ratios are still most depressed, it's the big banks. That's where the valuations are still the least demanding. So within the value space, things like energy and financials, we prefer financials. But as I was saying before, I do think people should keep their expectations moderated and look for what's really going to benefit from a long-lasting cycle.
Well, with that in mind, Laura, isn't this just the prudent way of an executive and a C-suite managing expectations?
Yeah, exactly. And if you look at the return on equity adjustments that they've made for the investment bank, last year I think they guided to something like 14%, but then they got 15%, and this year they guided 1% down, so now it's 13% expected for 2017. But you can imagine a scenario where they then come in at 14%, therefore beating their own expectations.